Hey everyone, if you're new, I welcome you to my channel. If you're a follower, welcome back. Make sure you like and share and subscribe to my YouTube channel. Trying to build it up. It's doing very well, but I'd like to get it even better. So let me just show you where we are right now. So we're at 88. We need another 12 new subscribers. Once we get to 1,000 subscribers, I'm going to do a $50 Ethereum giveaway. So if you're new on this channel and you want to play a part of the new drawing at 1,000, please subscribe to my channel. Turn on notifications, and every time I make a new video, you'll be alerted in email that I put out a new video. So I'm going to focus on some technical analysis of Bitcoin and Neo again. I wanted to kind of show you some updates and some targets for those two. And going back to my Facebook page, if you want to connect with me on Facebook, you can find, underneath this video, you'll see a link for my Facebook page. You'll see a link for a bunch of other social media sites. And, you can connect with me there, on certainly on YouTube. You can see what I'm doing, what I'm talking about. This page right here is my portfolio. There's a link in the video description. And also, if you want to get here, you can get there by clicking on my banner picture. And then with this link right there, I'll take you right here. So this is where I put all my opportunities to, let's see if it's still there before I close it. All right, so I'm going to close Facebook. Close down some of these windows. So this is a website that you could actually join and have for yourself as well. You can configure the pictures, the text. It's all very easy. It's not very complicated. And what I do here is I share all the different opportunities I'm involved in. And on each one of these, I'm building a team, assisting my teammates to build a team. If they want to, some of them don't want to, some of them do. Some of these offer you an ability to earn some money without building a team. Almost all of them have a business side to it that if and when you decide you want to do it, you can start doing it, and most of them don't have an additional cost for you to do that. Now, I'm not going to talk about any of these individual ones tonight, so I want to kind of keep this video short. And I'm going to focus on some technical analysis on a couple of the coins that I've been watching, and just figuring out the Elliott waves and the retracements and all that kind of stuff. And I want to show it to you again because as you see it more and more, you can pick up and learn how to do it yourself and kind of correlate it with what everyone else is saying. If you see the same thing, or maybe you can play the video and then do it yourself on the side and kind of replicate what I'm doing and just get used to it. And then also what I am going to do is, within my opportunities here, there's an opportunity within this opportunity called Trend Trader. So I'm going to show you how I did some analysis here. And I take those screenshots so I can see what I say and see if it actually plays out the way I'm doing it, to kind of, validate what I'm doing. Now, this will come later. I want to move this over to the side. And where were we? All right. So if you like the software and the website that I'm going to show you here, you should get started with this opportunity and then reach out to me, and I can give you the details on how you can get access to that same platform. So you can start this for 30 days for free. So get that started. There's a bunch of webinars that you can come and join and learn. And then if you're interested in getting involved with that software, it's not really software. It's a website that publishes information for you on demand based on the most current state of the market of either Forex market and or cryptocurrencies. So it'll be a very good tool for you to kind of do your own analysis and then look at that and see if it matches what you're thinking. And if not, then maybe go back and look at it again, see if you're wrong, or maybe you don't, maybe in the end you don't agree with the software. But whatever it is, it'll maybe make you not do a bad trade. If If you're thinking something and it's thinking something else, then maybe you should just stay away from that trade. There's nothing wrong with not doing a trade. The best trade you do is the trade you don't do if it's not like a high probability trade. Okay, so let me just review what I have here. All right, let's start with Bitcoin because that's the big gorilla in the room, right? All right, so right now on this view, I'm on the 1 hour view. And you've seen this before. I've had this up for a couple days now when I show this. Basically, there's two competing pitchforks. So let me just zoom out a little bit. Let's go to the 4 hour. I'm going to get rid of some of this stuff so it's not confusing for you because it can get confusing very quickly. All right. So after we hit the 20,000 mark back in mid-December, a downward trend occurred, right? And when you do a low to high and then you go to the previous high, and then you kind of tweak it to match what reality is, it's not always, I mean, it's pretty close actually. It's pretty close to going to this is a textbook pitchfork when you're able to go to the previous low and everything matches up. Or what you do here is you do a best fit. So you want to kind of get it so that things are bouncing off these Fibonacci's. And, you know, right here you want to kind of show that it's bouncing off a low. So it's within a channel. So this is another way to represent like a channel. You know, touch, 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 a lot of ceilings. And then, you know, that's probably going to be the area of influence where it's going to give us some trouble because it's a very, very strong resistance. So Bitcoin's going to have to break through that if it wants to go higher. So as you zoom in here, you can see, let's figure out, okay, so that's this right here, this line. Let's just draw another line here so we can keep track of it. This line right here is the next point of contention in my books. But I think it might retreat before that. I don't think it's going to get there. But we'll see. As we zoom in here, on the 4 hour might be a little bit too condensed for you to see. So I'm gonna shorten this up a little bit. Let's go to 2 hour. See if we could see it. Okay. This is okay. Might have to do more just to give you the clarity. But basically what you gotta do is you gotta try and figure out where the big Elliott wave is going. So, like, in fact, what we want to maybe possibly anticipate that this combination of a bunch of waves going on here. So it's a small one, right? And then there's the larger one. And then this could be the first leg, you know, equal to this at a larger scale. So you always want to see, this is like a fractal type picture that I showed you a couple days ago where things are repeating as you zoom in. So at a large scale, you got, you know, maybe the first leg of an uptrend that might happen. And then as you zoom in and you have little ones here, you know, you have a smaller one like this. And then in each of those legs, you have one that occurred in each one of those. So as we go in further, you can see that, well, first of all, let me fix that. So it's kind of a, let me delete this and I'll redraw it for you. In this first leg this is the first high. From here to here is a high, and then there was some retracement. If you take your tool, you can basically carve out a 5-wave Elliott. So that's 1 to 2, and then 3 to 4, and then finally to the high. And remember the rules. Wave 1 and wave 4 can't overlap, or at most they're going to touch just with wicks. So far it's holding, right? If you see where wave 1 is, wave 4, and I mentioned this yesterday. If you draw a horizontal line here at 1, So what is a ceiling on the uptrend sometimes becomes a floor on a downward move. So this was a ceiling here. This came up here. You could see it fought hard with these wicks to get past it. When it finally blew past it, normally before, like right here, you wouldn't want to buy. You want to wait typically for it to come back and check resistance, or in this case, it'll be a floor, which would be the high here. So these wicks higher like that, along with this previous high, and if you look back here, there's some support even back here at these levels. So there's a strong ceiling on the upward and a floor on the bottom. So you see it goes to 3. Then if you would have bought here, I mean, you would have still done okay. But most times people, traders will tell you, you don't buy here as this is breaking through. You wait for it to break through, and then you wait for it to come back and check and see if it holds, because it could be coming right back down. But then if it bounces off here, you would typically enter a trade on this second candle because it's confirmed that it's going to stay above this floor. So that's how floors and ceilings are made, and that's how Elliott waves, typically, from 2 to 3 back to 4. If it's a true Elliott wave, you'll see this 4 will always be above or equal to the 1. So that means it's a valid wave. The other thing, remember yesterday I was mentioning that if wave 1 to 2 is a deep retracement, meaning that Fibonacci from top, from here to here, it comes down and is a deep retracement, which is 78. The wave 3 to 4 retracement is going to be shallow. So if this is deep, this is shallow. If this is shallow, this is typically deep. They won't be both deep unless there's really uncertainty in the market and you start just getting a sideways channel. But if it's an Elliott wave with impulses, if the first wave is deep, the second wave will be short. If the first wave is short, the second one will be deep. So we see that this came down and touched right exactly almost at the 78. That's 61 to 65 is the typical, but there are times that it comes down to 68. So at this point right here, if you were looking to buy, this would be the zone between 61 and 78 where you would be partially buying into a position and building a position between this range. Now right here. Let me get off this. The magnet thing is cool, but it gets to be a pain as well. So you'd be buying into a position in this range. Let me make it a different color. Oop. Let's make it a different color so that I guess green to mean buy, right? So that would be the range that you would, try to figure out of where to buy, somewhere around there. You always wait for it to check, or you always wait for it to come back down to, very rarely do you see it stop at 38. In the first wave up, it'll typically come down to 61 or 78. And then the next time, let me try and copy this. There we go. So, like I said, this is a deep retracing because it came down past 61 to 78. So let's get rid of this Fibonacci so it cleans up the screen again. Now let's look at the Fibonacci from the second wave. So this is wave 1 to 2. Now let's look at the Fibonacci from 2 to 3 and see how far down it retraced. Let me get rid of this. So now you do a second wave Fibonacci retracement. So you go from bottom to top, and then you look to see where this hit. And look, ironically, it's 38.2, another textbook retracement level for Fibonacci. So some can say that these are algorithms that are working here. This is the big money, and they're just applying algorithms, and the algorithms have been programmed to analyze, find, and do trades based on Fibonacci and Elliott waves. So this is a textbook Elliott wave up. And then another thing you can do is you do extensions. So on this first one right here, if you do an extension, let's see how this works out. I don't remember if I did this. You go from here to here, and then back down to the low. And it blew past the 1. It came somewhere in the middle, you know, like I guess 1.3 or so. So it extended past 100%, which would, the 100% means that it would be the same length as this one right here. So this basically did 150% move up. And if you remember yesterday, and basically when I figure out my targets, I do conservative. I assume that wave 1, if you take the distance, let me see if I could draw this to kind of help what you guys do to visualize it. So from basically from here, how good that's going to be, because now, oh, okay, I can move it. Let's change the color. Let's do silicone. All right, so 100 for the extension. This is the length right here. So if you copy that and you place it here, you see how it hits the 1. So that means that you're basically assuming that if wave 1's length was like this, wave 2 to 3 is going to be the same. And you can see it did about 125% of the distance that the first one did. So on wave 2, it did better. So basically though, the first wave did better and then it retraced shallow. But look where the 5th wave ended up. Very close to the 168, and that's typical. From here to, you know, from the beginning of wave 1 to the end of wave 5, a lot of times it ends up at 168. I mean 1.618. So that's the completion of the first wave. Now you come here and you look, you know, this time scale is not too good to see this, but let's go down to the lower time scale. Now what you do, you know, pretend like this isn't here. So 5 was hit, right? The max was hit here. Now you want to see, okay, well, what could happen here? And what you need to do there is you need to do the full scale Fibonacci. Because now this is the first wave again of a new wave. So you want to estimate how far down you have before you want to get in again. So if it's here, you shouldn't be buying there. You should be waiting for it to retrace a certain amount. And basically you figure that out again by doing Fibonacci. But this time you do the entire wave all at one time. Go from the bottom 0 to the top of 5. Now remember what I said, the first leg typically has a deep retracement. So this is the first leg of a bigger move. So look, it came down to 68. So this right here, like I told you, this would be your target. This would have been your target to buy, somewhere in here. As it approached this range, you'd be partially buying and building a position right down in here. And ironically, look, I just noticed this. This is where it hits the pitchfork. So this is like a virtual trend line. So this is another trend line that typically gets respected by the price movement. So by using Fibonacci, by using Elliott wave to determine how far you are up in the move, like right here, if you knew this is wave 5, you should never buy right here. You should be waiting for some type of retracement. Now it could be shallow. Look, they kind of could have faked you out here, and that's why I'm saying, like, as it bounces, you know, it came up and it bounced off this one and then came back down and dropped even lower. So again, you got to be patient, and you got to make sure you pick the times to get in. Let me I'm just fixing this. So what happens is at different scales, these pickoffs kind of get skewed because of the way that they graph these points at different scales. So when I go back out, they're going to be off again. So, so we know there's a good chance that it's gonna retrace down somewhere down here, right? High probability that from one, from 1 to 2 on the first wave, it's typically down to 61.8. As this is happening, what you need to do is you got to figure out where the count of the Elliott wave is, so that you could kind of figure out where the bottom is going to be. So if you were drawing this out and wave 5 seems to be at 38.2, then maybe you have a higher probability that it's not going to go any lower. But if you're only on wave 1 or wave 2 when it gets to 38.2, then you know there's probably another wave coming down here. So what you do is you draw the Elliott wave. So you start from the top, come down. Again, it's hard to see. Let me zoom into 15 minutes so you can really see the wave. Okay. So you would draw the Elliott wave, and you would start at the top, see where the first kind of bottom is, pick that off. Then you see where it goes up to, pick that off. Then you try to figure out, oh, actually I missed one. I went too fast. So you start at the top, you find the first bottom, and then you find the next top, and you look for the next bottom that's lower than 1. And then you hope that the move up got blocked by that resistance, right? So you can see wave 4 is below wave 1, which is good. And remember that virtual floor. I'll show it to you in a minute. Then what you do is you look for the next bottom, and then you go to the next top. I'm sorry. What did I do here? Yeah, I guess that's it. And this is maybe an ABC. Let's see. Let's go back to the other scale. Did I draw that right? Well, actually, this actually could be this way. Still respects the distance. This is kind of like a sideways move. So this is really the next deep and then the retracement. And I bet if we did the retracements on these, we would see, so we go from top to bottom. Very hard to see. Let's see. Right, it stopped exactly somewhere between 61 and 70. So you see how this was a deep retracement. Let's see what the second one looks like. Let's see if it held up the thought that if the first one's deep, the second one isn't. It's looking like it might be pretty deep as well. This is ABC or something. So you go from the bottom to the top. And no, it's good. So you start here, you go to here, and then you see how much it retraced. So this one was a deep retracement, and then actually this one only stopped at 23. Or am I getting them mixed up because there's 2 of them there? Let's delete this. Let's just delete this temporarily. Go from here. Oh, wrong one. Go from here to here. Okay, and it did retrace, but as you can see, it didn't go to 61.8 or 78. It did blow past 38 a little bit. So, somewhere around here is your buying opportunity that I speak about. Let's see if I could clone this. Somewhere in this range, you would have been looking to buy. I mean, sell. I'm sorry. You wouldn't be if you're only a person that wants to look at the long position, you wouldn't be doing this. But if you were looking to go short, you would be targeting Elliott 5 of the first one to go down, and then you would want to figure out how far down you are so that you can get a short trade. But more importantly, if you were a long trader, you'd want to make sure you get this count correct so that you know that the retracement is done. So then you'd want to be buying somewhere down in here. Now let's go back to the bigger picture here. So remember, this is leg 1, and this is the retracement of leg 1. So if you know where your count is, and if you estimate it's going to be a deep retracement, you would be able to kind of tell yourself, okay, I should be patient, and I shouldn't get in until it hits the 618 area, which is right here. So you always got to know your Elliott count. You got to know the wave count, so you know if it's still going upward on impulses or if there's going to be a correction. If there's going to be a correction, you want to wait for it to come down to the 61.8 before you buy in. And then after you do the buy-in here, it's important to figure out the wave count on the way up. So right here, you know, you got the 1, 2, 3, 4, 5. And then there's a consolidation sideways. ABC. Let me zoom this in a little bit here. There's a little bit ABC going on here. And then it starts another one. 1, 2, 3, 4. And look again. 4 is above 1. Oh, I wanted to kind of show you that here. So remember, wave counts are very important. But looking here, when we were doing this count, you can see there's a wall right here. There's a floor. Let me get this off. So, you know, in between, actually I could do this. In between this range right here, there's a lot of resistance on the way up and support on the way down. So it broke through, came up, came down to check, and went up and finished. Then on the way down, boom, it tried to break through, resistance, it bounced up, retracement, then it broke through, and then before it kept going down, okay, it said, okay, let me see if I can, you know, see if I can get back up. And then it hit the resistance because there's a lot of resistance because this was created earlier. All this is resistance. So boom, it tried to go past up again, met resistance or a ceiling, and boom, it came down. And then that ended the next wave. And then it tried it again. Boom, it tried to go up past that again. It hit more resistance, so it came down. And even down here, you could see like these wicks, all these wicks right here, all these wicks. That's creating a floor for here. That's a resistance level. That's why it bounced off. There's a lot of wicks up, up, up. You know, then it went up, hit the ceiling, boom. You know, then it came down, checked, it went up. So this creates a resistance level, and that's what kind of ended Elliott waiting 5. I wonder, let's just for the heck of it, let's try this. Let's try extension. Let's try from low to high to low in the reverse way. It was very shallow. Oh, actually, no, that was very deep. But if you do, let's try it here. From 2 to 3, back to 4. And look at that. Ironically, very, very close to the 100 mark. See that 100 mark right here? 100%. So basically what that's saying is this distance right here, let's draw the line. Let's draw a trend line. From here to here, if I clone that, if I clone this line right here, and I take it and I place it here, the angle might be different, but this top and the bottom, you see how it matches exactly? So that's basically saying that there's a good gauge that if you know where the second, you know, the second wave right here ends, you can anticipate if you know where it's retracing to, boom, put it there. That'll give you a good idea of where you could probably guess that it'll go to, and that's 100%. So that's how you kind of figure out your sell targets. You know, you assume maybe 100% on these waves, and then you would put a sell price somewhere around this if you were shorting this. And you do the same thing on the upside. So I didn't want to be biased in one direction, but you would do the same exact analysis right here. You would take this. This is wave 1. Then you would clone it. And then you could kind of, if you want to be conservative, if you know where the retracement ended, you could put your sell target right here. And I don't know, it's pretty close. It's a little off, but this is a gauge. So when you know wave 1 has started and it's going to wave 2 and the bottom's out, you take the distance from here to here and you replicate it right here, and that'll give you a pretty confident sell target. I mean, you don't want to get greedy, right? Small wins are okay, and this is a high probability trade. If you would have put your sell right here, you would have been out. Yeah, you could have made a little bit more, but why not just get out and wait for this to end because of the wave count, right? Now you do your wave count here. It's a little hard at this level. Let's see if right here. Let's see if we could do this together. 1, 2, 3, 4, 5. Yeah. So you go from here to here, down to here, up to here, up to here, and then boom. And is that the 100% that we talked about? I think so. We're close to it. It's a little bit higher, but even if you kind of figured, you know, it's kind of like an ABC going on here, which, you know, correction, and boom, you had the impulse. So that's the kind of analysis you got to do. You got to use the retracement tool. You got to use the extension. You got to use the pitchfork. You got to use the Elliott wave. I mean, I haven't even talked about the Bollinger Bands. I mean, you could probably see, like when it hits wave 5, it's breaching the Bollinger Bands. When it hits wave, you know, right here at the top, it's in the Bollinger Bands. When it hits the 5th wave at the end, it's in the Bollinger Band. So that's price change. You can see, like, all the significant points that we've picked out are typically going to be breaching the Bollinger Bands. So that gives you a good gauge that it's oversold. Actually, I don't even have that on here. I don't have RSI listed on this page right now. Alright, so only because this video is a half hour already, maybe I'll stop here for tonight and just do Bitcoin. Maybe I'll show you some other things. But that's how you do the technical analysis. And right now, based on, you know, this short-term single wave here ending here, we're looking at a 10K, you know, 10K price apparently, or 96, somewhere around 96. Oh no, I'm sorry, that's where we are now. This right here, I'm sorry, I kind of misspoke there. I got mixed up with this red line. This is the actual price right now, and basically what I'm suggesting here, right here, you would be selling right now. You'd be selling, and you would wait for it to come down. And remember, because of the retracements, this one was a deep retracement. So the next one, this one that up here that I figured out by doing this, go from here up to here, 38. So right here, somewhere around 30, you'd be selling right now and waiting for it to come back down here to buy again. And then the final target, the completion of 5, is going to take us up to about 10K. So let's see what happens. Let's talk about this again the next day and see if it did come down here, or maybe I was wrong. Maybe I was right. But right now, if it was me, I mean, I do have a long-term hold in Bitcoin, so I'm not worried about trading this right now. But if I was trading Bitcoin, I'd be looking to sell my position right here. And also look how nicely it lines up with these Fibonacci on the pitchforks. So right here, you typically, you know, you're going to see it retrace down. And if you really want to, if it goes past 4, it's a high probability that it'll bounce off of here. So maybe this 4 comes out to be over here instead, because that matches up. That'll match up with the trend line of the pitchfork. So it still can hit 38. I mean, the time is the essence right here, right? To figure out how fast it's going to happen. So actually, the pitchfork kind of helps with the timing, because right now you could align the 38 to the edge of the pitchfork and see that it's probably going to be a lot of resistance to bounce off there, and it's probably going to take until the 16th, a couple days. So it's going to come down a couple days, and then just like I did here, this is the target based on the extension, but most likely it's going to be using this wall that we have here, this pitchfork, to stop it. So chances are this is going to also occur on the same day, the 16th. You're going to have a big spike up. So just remember, this is the high. It's going to be traced down to 38, and then it's going to bounce up, and it's going to hit a very psychological point. I mean, most likely it's actually probably going to be 10K. Realistically, it's going to have a lot of hard time at 10K, because it's a psychological number. So that's it for Bitcoin. So short term would be a short right here from 97-ish down to 92. So a nice $500 short if you guys want to do it. And then from 92 to 10K, which is another 800. So you can play both sides of the fence. Don't always, you have to be very unbiased and look at both sides. So let's see if this comes true. Let's see what happens here. I'm going to actually take a snapshot here of this picture. I'm going to save it so that we can come back to it tomorrow. Save image as BTC, USD. It's 0014 on 2/15/18. Time to short to 9200, then impulse to 10,000. All right, let's see what happens here. See if this comes true. Okay, so that's Bitcoin. Right, so I don't need that. Don't need that. What is this? Oh, this is my picture. This is another picture. This is Litecoin. Alright, so we're going to talk about NEO. NEO, I did another technical analysis here, and I'm not going to go through everything I just did. But based on what I'm seeing here, we got... I'm just trying to zoom in so I can show you. I'm not going to, like I said, I'm not going to go over these again. But there's a 5-wave here, then there's an ABC, then there's a 5-way here. You get to the first one, you figure out how far it retraced. Let me just get rid of this. I'm going to do this very quickly because it's getting almost 40 minutes. So then after it hits that 5, it's the end. You go from here to here, figure out where it retraced. So it's a shallow retracement from wave 1 to 2. So the next one's going to be deeper. The next retracement is going to be deeper. So what do you do? So if we're picking, this is real, this happens, so this locks that in. So it's somewhere around 38. So the next retracement should be deep if it follows the Elliott wave criteria. So what you do is you take the Elliott wave from 2 to 3, and then you see where 5 is. I mean, you see where the 1 ended here. So 4 has to end up somewhere around there to be legitimate. So you can lock in right here the 4 to bounce somewhere above the 5, which is close to 6.8. So it makes sense, right? I mean, you could probably go a little lower, but it's gonna do a little intermediate drip here, boom, boom, boom. It's gonna hit somewhere around 150 short term Neo, and then it's gonna retrace down somewhere down back to 115, and then again with the extensions, you figure out where wave 5 is going to end by doing the extension. So I'll just do that real quick for you to show you how I came up with that. So you go from low to high, back to low, and then you pick somewhere. Oh, actually, let's do this on the full wave. Let's go 1 to 2, back to here, and you see the first one ends around 1. And I'm being conservative. I'm thinking the wave 5 is going to end at the 1.618 level. So this is my short-term target for Neo before it's going to do some type of sideways movements for a while, or maybe corrections. And this is just out there. And then what I did further was, let me zoom out a little further. I did a retracement at a larger scale. So I figured out that Fibonacci from this low end, where it was here, to its high, it's come down, and look at this. It bounced right off of the 78 again. See how Elliott wave 1 to 2 is always deep? So then the next one's going to be shallow. So once you figure out that this is a deep one, then what you do is you use your tools again. You go from here, from 2 up to 3. And then you pick somewhere around the shallow range, which was 38.2. And when you pick that, look what's ironically happening. Wave 4 is a bit above wave 1, which is required. The 1 becomes a 1 is a ceiling here, and as it breaks through here, it's going to become a floor, and it's going to bounce up. So if wave 1 is deep, the second wave is shallow. This number 4 needs to be above wave 1. So those are the two main criteria for Elliott wave. So let me get rid of this. So then the next thing I did was, okay, so this is deep, this is shallow. Let's see what some targets are. So let's do extensions. So you go to the Fibonacci extensions. Where is extensions? Why am I blind? Oh, here we are. So you go from here to here, back down to here, and you start finding out that realistically at this larger scale, it looks like wave 3 is going to hit 1.681. It's required, right? I mean, it's required that 4 has to stay above 1. So this wave, if it's going to be shallow, it's going to have to retrace down to 38 in order to do that. Or I guess what could happen here, actually, let's do Fibonacci again. I mean, it could be a bull run, and maybe it won't even go down to 38. Maybe it'll only go down to 30. Go down to 23. So let's see something here. Let's put this at the 1. Put this here. It's very close. It could be a shallow one. Maybe it's a shallow one. Very shallow. Because I mean, again, it has to stay above. Here. So that would be a very bullish retracement if it's going to move into that kind of range. And then maybe the final one. Final one ends up here, 319. In the end, whatever way you want to look at it, I think, the full-blown, if you want to go up here and you want to make this more deep, down to 23, the end is you should target no more than, 1.618 for the final. So really, what 320 is the end game, and it's going to see how it plays out here. I mean, it's hard to say what's going to happen here, but I don't know if it's going to stop here and go back. So we got to kind of keep this updated to see where the resistance gets hit, and then it starts coming down again. But if you want to do the extension, this is one. 1.0 should be your short-term target, which is 222, and then this should be your longer-term target, which is 320. So those are the two targets based on this overall move. Now, I guess, if you could play around with this bottom here, but I went to the extreme, worst case scenario. So this is conservative probably. But bottom line is you gotta use those tools. I guess that's what I'm trying to get across to you guys. You gotta learn about the Elliott wave. You gotta learn the requirements of an Elliott wave. Wave 1 and 4 can't overlap more than a wick or so. This ceiling has to become its floor. If this is a deep retracement, this is going to be a shallow retracement. And then you use the extension. You go from the low to the high, back to the low of the first retracement, and then you map out. This is 1.0. That's your first target. And 1.618 is your second target. And depending on when you want to get in and get out, or what kind of trader you are, you could play these waves. If you go in closer, there's a lot of opportunity for trades to happen here. And it's a little cluttered with everything I have drawn here. See, even at the small scale, it's very fractal oriented. You go one, this is the start of another one. 1 to 2, 3 to 4. 4 is above 1. And it closes here. Then there's a correction, A, B, C. And a new one starts. 1 to 2, 3 to 4. You look at 4, 4 is above 1. And then it hits the 5. So when you hit 5, if you knew that, you wouldn't be buying. You'd be waiting for a retracement. And let's see what this retracement is. Go from here to here. Let's see. Get this a little clearer. So this is kind of in between. It almost hit the 5.5, right? This could be considered a shallow one. So let's see what the next one was. Oh. So if this is shallow, let's see what I figured out for the second one. So I think I probably set it at 168. So let's see. Boom to boom. Yeah, close to 168. And just remember, 4 always has to be above 1. It's very close. This probably should even go up a little bit more. Somewhere around there. And really the short-term play here, right here, is what's happening right now, right? So we got a 1 to 2, and now we're approaching a 3. And I set that target by doing an extension, right? Let's do one to 2. I mean 1 to 2, and then boom, 1.0 right here. This is basically what I'm saying. If you want a high probability trade, you would have bought in somewhere around here, and now you'd be looking to sell at 125. I'm in a trade right now. Let's see how it's doing actually. I'm actually down a little bit, but I'm actually, my target's going to be up here. I'm going to be looking to sell when it hits the 5. So I'm okay with seeing these changes here, but I'm looking to get out as it completes the 5 here. So at somewhere around 150. That's my sell target right now. So I'm playing a little bit short term on this, but you know the overall within the next, I guess actually next video I'll do it, but what we could do, what kind of worked out nice with the other one that I was telling you about. This this pitchfork really came in handy to find out where these targets could be, right? Where did I, yeah, right here, right? You know, you have that line of that pitchfork, and you can kind of tailor your points of where you think it's going to bounce in time. That'll help you lock in a time frame. So I'm going to do it offline, but I'm going to apply the same type of thing here. I'm going to do some pitchforks and figure out a channel, and then I'm going to kind of figure out where these, like right here, you can see a trend line starting already. So if you wanted to do a pitchfork, we'd probably do something like this. Get that high, and you go to the low, and then you would take this and you kind of tweak it to what's happening here. So you would kind of figure that in here, something like that. So what that really means is if you assume that this is going to stay in the channel, this number, yeah. Oh, actually, that's part of a bigger, let's go with the bigger one. Yeah. This is a mini one. So if we did that again, it would be from here to here, and then you would tweak it right here. And then you can see that these points stay within this one, right? But at a larger scale, if you're looking in for the longer term and you want to focus on, you know, this bigger one right here, you have to do a bit bigger pitchfork. So you'd have to come down here and do this to this, and then from there you would kind of focus in on what's going on. And you'd have to make some assumptions, and then you could, you kind of play around with the targets on that. So maybe you would move this over to here, and this kind of fits nice right there at the median. So maybe it's a little bit more drawn out. So sometimes if this is quicker, the third to the fourth is kind of drawn out and long. So you can use, like, it's nice because like right now we could see that sometime in the next 4 days it's going to probably hit this five target, and then there's going to be retracement, and you could probably get in somewhere over here, which the time scale isn't there for some reason. I wonder why. Oh, yeah, because I'm too close in. Yeah, because I was too close in. So basically, you would look to sell somewhere around the 19th, and then you would wait it out, get back in sometime in the 23rd at 121, and then you can look to sell at 150 in 7-8 days. This last move. So this pitchfork is actually very handy to lock in some possible days and how long it might take to get there. And just using these as, hard references that'll respect it and bounce off. And the key is to find, you got to kind of tweak it to find where things are happening. So when you zoom in here, you could see that it respected this line right here a lot. Then it bounced off this line a lot, came down here and touched that line, and it kind of, go back and forth a little bit, boom, boom, boom. So, I mean, this is kind of where this pitchfork should lay based on some of these hot points. So with that in mind, I mean, maybe even this one, maybe even this one is over here. and this is over here. Yeah, it works something like that. So it kind of bounces off the median. I mean, it could look like that as well. That just means that it's going to be a longer time to get to number 3. So it might take until the 21st, which is like another 6 days for me to complete my trade that I'm looking to do. And then if that happens, 2021 to 24, it's suggesting that it could go down pretty quickly in 3 days. So that's how you use it, guys. Again, I'm not no expert here. I'm just kind of teaching what I've learned, sharing it with you guys, learning as we go. I'm going to do this real time with you guys so you can kind of see how the thought process should go. And the important thing is not to get greedy. You can't get greedy. The other thing you got to do too is you should always look at the other pitchforks, right? There's always an upward one, but there's always a downward one as well. So you gotta do both. You gotta tweak it to kind of fit what's going on. And then as these two cross like this, these are going to be very momentum driven points. Like right here, when there's a cross between two different Fibonacci's, it's gonna blast. It's gonna either blast down or blast up. And right now it's gonna look like it's probably gonna hit this wall, kind of meander its way down, and then as it gets close to this power inflection point, or whatever you want to call it, I forgot the exact term, but when you have two pitchforks crossing, two Fibonacci's crossing at a point, there's going to be a move. So within a couple days here, the 17th, it looks like there's going to be a major move. So it might be an impulse high. So maybe we'll get to 5 early, or unfortunately it breaks down and doesn't follow Fibonacci and Elliott waves and all that, and it goes down. But I think we're in pretty good shape here, though. I think it's going to be a little bit shallow retracement down to 117, and then it's going to take off right when it hits this area right here. Is a very important area. Right here. That area is very important. That's where the move is going to happen. That's where the algorithms are going to fight each other, and one algorithm is going to win and the other one's going to lose right there. And the way it looks, I mean, if it's going to keep with this Elliott wave count and how I have it drawn out, it's going to be a blast upwards up to 148 from 121. So it's going to be like a 20-point move, which is what, 20 points out of 120? 20 divided by 120. It's going to be a nice 16% move as we get closer to that. And so 122 divided by, I did that wrong, 150. It's nice. 23% trade that I'm looking to do here. I'm in right around here. I got yeah, I'm not supposed to buy here, but I'm not worried about this correction. What I'm going to do is it comes down here, I'm going to average my price down and create a nice trade right here. Now again, I want to mention this to you guys. I've been pretty good with mentioning this, but I actually forgot today. I am not a financial advisor. I am not a professional trader. I am not suggesting you do anything I'm showing you here. I'm kind of showing you this for education, and I'm kind of telling you what I'm doing personally, but you have to make sure you decide for yourself what is right for you. You got to make sure you use the right risk management. I don't want to see you guys lose money just because you saw me do something. You got to make sure you learn this skill set so you can do everything I'm doing here for yourself. And once you get that skill set, no one's ever going to be able to take that away from you. So just realize that, and there's a lot of money to be made, but you got to be patient. You got to think with your head. Like right now, truly, if you're not already in this, you should really wait for it to come down a little bit. You can, get it for like $5 cheaper, and do what you guys feel is good for you. Okay, so just use all these different tools that I mentioned to give you reasons. And again, I haven't really even touched upon oversold. And so right here, you know, when you start looking at this, when this gets like when it gets close to 3, it's gonna probably be up in this range and it's gonna change. So that's RSI. There's MACD, there's stochastics, there's other things you should be looking at as well, in addition to the Bollinger Bands. Let's see what these Bollinger Bands are telling us. So they're already breaching it. You know, just realize, just because I have this drawn here, very easily could be here. You know, from here to here. You know, that could be it right there. It's already inside the Bollinger Bands and it started downward. So it could be coming down here. Now, I don't remember what this target should have been. I think it was like 125. So, yeah, that's basically 125 exactly. Look at that. And look at this. See this right here? So this is really cool. So this is actually, this is the other pitchfork going downward. So it bounced off that pitchfork. So really, that's how you can use these tools, like right here. If you really want to play the game, probably want to put that 4 right there, because it's probably going to come down to this this line right here on this other pitchfork, and use that as resistance. So this is how it could play out right here. So let's see what happens. You know, maybe just what did I just do? So maybe what's going to happen here instead, I kind of drew it so that it was going to be near this inflection point. What could be the case that's going to play out here is the following. So it's gonna come down here. Then it's probably going to bounce off here, come up here and hit this. It's going to come here and hit this. And it's going to come here and hit this. 1, 2, 3, 4. And it's going to come here and hit this, somewhere like that. And boom, it's going to go up. That's probably what's going to happen. It's like a triangle right there. You see it? I'm anticipating a triangle. 1, 2, 3, 4, 5. You know, maybe my count's off. Maybe that was 5 already. Since this is touching already, it's, you know, you do this right here. Triangle wave. And you pick there, here, 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 and here. Yeah, I was right. It's gonna be here. So it's either gonna go up or it's gonna go down at E. That's the important question right there. So if I was you, I would wait for it to make its move somewhere around here. Somewhere around 121. It's going to decide over time here, over the next day or so. It's going to make a move. It's probably going to end up doing something like this, and then boom, or boom. And we're all hoping, well, actually, I'm not saying all, because you guys may be playing different ways. It could go up, it could go down, whatever you guys are looking for. So, you know, a good chance it's gonna bounce around like this. You know, like this. Maybe from here to here, here to here, and boom again. You know, maybe hit this median a couple times, ride it up there. And of course, I'm just kind of randomly drawing this, but what you guys should be doing is figuring out the Elliott waves, right? If I get rid of this, oh, I don't even know how to undo. I don't know if there is an undo. just think about these as resistance and support. So it's going to bounce around in here, but you got to keep track of the wave counts, so you know when there's going to be retracement, when it's when it's done its impulse move, so that you know when to get back in. So right now we've approached wave number 3, so now we're looking for a retracement. From here, after that happens, what you're going to be looking for is a move up from here, to here, down to here, and up to here, and down to somewhere around here, and then finally another wave 5. And I don't know if wave 5 is going to take us all the way up there, so it may just go up to here somewhere, wherever that 168 number is, and then maybe a new wave 5 is going to start, right? Maybe there'll be another one that starts out somewhere over here and go up to this, come down, go up, come down, and go up. And maybe like an ABC in here. Something like this. Where these could be playing off this resistance wall right here on its way down. Boom, it hit resistance, it goes up, boom, it hits resistance, boom, it goes down, and then it goes up. It rides this median for a while. And to be right, it has to be something like this. 3 can't be higher than 5. So it's gonna bounce off here. It's gonna probably end up doing something like this to this bigger wave 1. So you can see that. So there's two 5 waves. Actually 3 5 waves. 1, 2, 3, 4, 5. Alright, it's over an hour. I hope you guys got some value out of this. I wanted to kind of show you the different tools you can use. When you first get started, kind of declutter your screen. Just practice on trying to go back in time. Bring up this is called Trading View. So bring this up and see if you can count. Repeat what I did here. You could bring this to the front and just count them out, and make sure you're getting it so that it's keeping the rule. Like 1 has to be lower than 4. If this is a deep, this is a shallow. After 5, there's a retracement. The bigger one is going to retrace deep or shallow. If this is shallow, the next one that's going to retreat is going to be deep. You just work on those requirements. Write them down so you can look at them and remember them. You got to just kind of draw it out and then check to see it meets all the requirements. Alright guys, have a great night. Like I said, I'll do the next giveaway when we hit 1,000. It's going to be for $50 worth of Ethereum. So please like, share, and most importantly, subscribe to my YouTube channel so that we can get to 1,000 so I can give away some more money. And then we'll set the goal for the next giveaway, which will be $100 for 1,500 people. So if we can get to 1,500 people faster, then I'll just combine the two. But it's up to you guys, all right? Take care, have a great night, and I'll look forward to making another video for you guys tomorrow to talk about some other things. Oh, actually, before we go, I wanted to show you this. Where is it? Oh, here it is. Okay. I wanted to show you this. This was the whole point. So this is that trading software that I was talking about. And you can see here that there's a buy once it hits 114, and the target is 186 and 250. So let's take a look at what we have here. Let me zoom out a little bit. Boom. So I think I was much more conservative than what they're suggesting, right? 180 is where they want to go to, and I'm possibly looking to get out at 149. But they're basically suggesting that if it broke 114, what this screen basically is telling us, that at the daily level, you would want to buy. Oh, this is the wrong one. Where is it? At the weekly level, once this is met, 114, and now we're at 121. So this is going to be met, as long as it stays above 114. They're saying it can go to 186 and then 258. So if you look at my fifth wave, it's pretty damn close. I estimated around 180, and then I took a look at that, and they're saying 186. So that's like pretty darn close. And I didn't even bother. Oh, actually, I did. I forgot I did this. The bigger wave is here. So if you even zoom out even further, so this is their first target. My first target to sell is here, and then I'll buy it back in here, and then I'll sell again here. And then I'm going to figure out more trades as we get up to here. But their first target, their second target, is basically, what was it? 258. And when I did my analysis, I came out to be like 254. So it's a couple dollars off, and it could be because they use multiple exchange pricing and averaging and stuff, but it's pretty darn close. It was kind of ironic. I did all this, and I'm like, wait a minute, let me check the other software that I have. And it came out to be like basically this should be my first sell, and this should be my second sell. But I'm going to play the game where I can get in and out short term and actually do well, because the first retracement was shallow. So why should I stay in and ride it all the way back down when I could sell over here, wait for it to come down to 121 again, and then get out at 180, right? Why not ride it up here, get out, maybe even short it here, get out, and then buy it again. And then, take it even further, right? I mean, there's more stuff that's going to happen in here all the way up to here. So I know, regardless of the positions I buy, even if I have short-term losses and I'm in a loss, I know this is going to track upward up to 180 or 250. So I'm glad I remembered that. Like I said, if you're interested in learning and getting involved with this as another way of confirming what you're doing, you got to join CoinMD. Join CoinMD, try it out for 30 days, reach out to me. I'll invite you to a special webinar, and they'll talk about the product, or the cost of the product, all that kind of stuff. So, but the important thing is for you to get started for free and then reach out to me. And there's some bonuses that are good until the 15th of March. So you really should try it out and get in touch with me and have a discussion. All right, guys, take care. Have a great night.